Hey everybody, this is Ryan Mallory and we're going to talk about the Tesla stock. It was a big day for the stock. Why is it? They just reported Q3 earnings. And what did they do? They gave us $8.77 billion of revenue versus $8.36 billion expected. Good sizable beat right there. But even more impressive was the earnings per share. They came in at 76 cents per share versus 57 cents expected. That's another huge beat. Huge beat. Now I know there's a lot of people out there and they're probably got a valid argument that'll say, hey, Tesla is only profitable because of all of the government subsidies that they're receiving. Legit argument here. I'm not here, nor is this video created to debunk those theories, okay? What I'm trying to do here is look at the technical analysis, because the earnings is a flash in the pan, because the earnings report will trump anything technically. If they have a bad earnings report, it'll crush through any kind of support. If they have a great earnings report, it'll crush through any kind of resistance overhead. So what we want to do is, once the earnings subsides, the dust settles, where's the trade setup at? Is there one here? And I think there is, and we're going to get into that in this video here today. So the trade continues to remain this trend line off of the late June. It goes all the way up perfectly and it holds and it sticks to this 50-day moving average. I love it. The only thing that concerns me a little bit is that it hasn't made new all-time highs since the ones that were established back on September 1st. Has not happened yet. Instead, it's traded sideways for almost 2 months now. And prior to the earnings report, guess what was happening? It was testing this June trend line. I love it. I was probably ready to buy it right then, but I don't hold stocks through earnings because I'm not some kind of financial genius, nor is anybody else that they can reasonably predict what is the stock price of any stock going to do when it goes into earnings. I'm not going to kid myself. I'm just going to stick to the technicals. That's what I do on this channel. Now, back in July and early August, you had this really nice triangle that was forming. It broke out to the upside and it did it in a dramatic manner. Now, the breakouts of late has not been as dependable as what we saw back in August, and that's unfortunate. So what is the play here? The strategy is to continue to play this rising trend line going back to late June. That's the only play there is right now, because I don't have a lot of faith in the breakouts here. And here's the reason why. You have a triangle pattern from the September 1st highs that was created. It broke out, but then it traded sideways. Well, then there was a secondary breakout opportunity. What did it do? It head faked. So there's really not a good, legitimate breakout opportunity in Tesla of late. They've been really giving you a lot of head fakes. So the best way to play it has been off of this rising trend line going back to late June, and that's what I'm focused on here. Now, when you take into account the chart following the earnings report, it's a much different picture. It didn't close on the trend line. It actually bounced off of the trend line just above the 50-day moving average. And that's why I think that there may be a play here that you can actually play this trend line on a bounce higher. Again, I'm not as much into the breakouts here. I've tried it twice this past month. Neither of them materialized. They're just not showing the same breakout potential that they showed back in August. Instead, it's better to buy it on the dip. Now, before I go any further, I'd be remiss if I didn't tell you about my YouTube membership program here. This is a great membership program that's going to provide you with all of my market research each and every day. It's going to give you updates on the S&P 500, the Russell Index, and the NASDAQ. On top of that, you're also going to get updates on the FANG stocks. That's going to be Facebook, Amazon, Netflix, Apple, Google, Microsoft, and Tesla, like what we're doing right here. On top of that, you're also going to get my personal watch list, both bullish and bearish, and all the charts that I find interesting throughout the day. So I'm going to constantly be throwing information at you, trade setups, good stuff that you can capitalize on. So make sure to click join below, find out the plan that's best for you. Now, the one thing that you want to be careful of, yes, it had a positive response to earnings. That's good. But it wasn't a massive response. It responded to the tune of about 3%. That also sets up for a fade the following day. You want to kind of be careful about that. The best plan or best approach I can think of when it comes to Tesla is just lay off the first 30 minutes of trading, see what it does. For the more conservative investors and traders, I would probably wait a couple of days, maybe even 3 days before really giving it a shot. Because sometimes it takes a couple of days for the earnings report and the dust that it creates to settle. So if you don't have as much risk tolerance, give it a couple of days. That's usually my rule of thumb. But with Tesla, I like the fact that it's settling off of this It's settling just above this 50-day moving average, above the rising trend line, and it shows the potential following earnings to bounce. So I may give it a try. So what's the trade setup here? I'm going to wait for the first 30 minutes, give it some time for it to figure out what it wants to do. If it just goes higher, it goes to 450 or 460, whatever, I'll let it do it. I'm not going to chase after it. Chasing stocks is like one of the worst things you can do as a trader. You start getting into the habit of chasing stocks regardless of what the price action tells you, you're going to lose big time. That's what is happening to all these Robinhood bros. They're chasing after Hertz. They're chasing after Kodak. They're chasing after SPI. I don't even know what SPI stands for. Does anybody know what SPI stands for? I don't know what it is. It's just some random stock that people just get all like crazy about. But people, they chase after stuff. Don't chase after Tesla, okay? If the risk reward makes sense, if the entry and the stop loss makes sense, if they all line up, then I'm going to get into it. But if it doesn't, then it's oh well, it's the next trade. I don't care that it's Tesla. All I care about is it a good risk reward trade setup? And if it's not, then I'm moving on. But I think that anything that is under that 442 area, I'd be willing to consider buying. I'd like it to be more into like the 430s. I don't know if it'll stay down there long enough at the open tomorrow. I think there's a chance that you're going to see a rush of people that are trying to buy it. It's a matter not whether it fades and can hold that rising trend line. If it can hold that rising trend line, that's kind of your clue to get into it. I would use a stop loss below the October 6th lows. That's going to give you about 405.90. That's what I would use as my stop loss. And then you can write it up with the target being new all-time highs around the 500 area. Now, ultimately, if we see a big market pullback, if we start seeing a lot of hesitancy from the market and some panic selling as we near the election, then the ultimate trend line is going to be still this trend line off of the March lows. And I just like bringing it up because so many of you guys just get butthurt every time I say something about the trend line off of the March lows. It's like, oh, it's never going to go down that low. I can assure you it's probably going to test that trend line at some point in the future. I just don't know if it's going to be now. If this thing can hold the trend line that goes back to late June, that's great. We'll ride that up back to all-time highs. But if it doesn't, let's target the one from the March lows. In the end, don't get so wrapped up about what Tesla means to you. Stocks don't mean anything, okay? It's just about price analysis. It's about risk, reward. What's the target? Follow that. Don't get all worked up. It's like, well, I think Tesla's just like the greatest stock. I think that it has the potential to turn water into wine. No, don't be like that, guys. Just look at it for what it is. It's a stock chart, okay? If you're an investor, that's a whole other different consideration. You're looking to hold it for 20, 30 years, you got to take in other things into consideration. If it's trade, it's totally different. In the end, follow your stops, plan the trade ahead of time, know where you're going to get out before you ever get in, and I think you'll be okay. If you like this video, I encourage you to like the video, subscribe to the channel, and we can all be one happy family, okay? So make sure you do that. It helps me out. It helps me continue to push out some really good content. And I just really like the fact that you guys continue to watch these videos week after week. And let me know down in the comments section, what is your strategy with Tesla? Are you buying? Are you selling? Are you holding? Can't wait to hear your answers. I'll make sure to respond. Thank you guys, and God bless.